Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, 8th day of December, 2016, and this is the Daily Report for Gold and Silver. Following announcements by the European Central Bank of yet another round of quantitative easing, we saw the dollar gain tremendously in terms of strength, trading up about 0.8% on the day, a sizable move. The net result, of course, on the precious metals markets were lower pricing. Gold was able to compensate that drawdown because when we look at gold closed off about 0.4%, so it made up about 0.4%, closing at $11.73, off about $4.50. That's just off of a low of roughly $11.71 and a high today of $11.80.70. Silver, however, was not able to fare as well. And even with the 0.8% drawdown, it exceeded that, closing off by about 1.2% in terms of the drawdown, or a 20% decline in value on silver to close at 17.07 with a low of 0.2 and a high of 17.29. So traders, as we have gone past settlement, of course, for the morning session in gold, we do have the market tightening just a little bit, moving up just a little bit, with spot gold now off about $2.80. And the reason I bring that up is to really, as we look at this first chart, is to talk about the fact that gold actually fared pretty well when we consider the following. I've just brought up the Kitco Gold Index. It's quite obvious and easy to see that the underlying strength of the U.S. dollar actually took away in terms of value about $10.40, about 0.9%, almost a full percentage on the strengthening U.S. dollar. But normal trading wasn't selling today by any stretch of the imagination. It actually was fairly moderately strong buying. That, of course, pushed the prices up $7.60. Not enough, of course, to compensate for the incredibly strong U.S. dollar, but nonetheless impressive in light of a strong U.S. dollar, which brings us to our current chart. And that is the daily chart that we are looking at right now. It is in standard bar chart format, and the reason that I want to use a bar chart format is I'm really focusing here on the lows more than anything else, and that 1169, 1170 area, which is the area that we have really looked at in terms of a critical level of support. Now, even on this daily chart, we can see that there have been moments where it has traded below this particular price point, really at the beginning of the week and the end of last week. But as a whole, I can tell you that it does appear as though, A, we are forming a base at this particular area, and that means we could see some real solid support and actually a bounce to higher pricing in gold based upon these technical studies. And I think most importantly is the fact that these recent fundamental shifts in dollar strength, equity strength, the dynamics of the scenarios, the global economic scenarios playing out, they have not caused any long-term technical chart damage. The fact that we are still trading above this price point really bodes well for this particular price point being a level of support and potentially holding. I think the probability that this price point, these lows at 1170 will hold is excellent, well above 80%. Which brings us to silver. Silver closed off about 1.2%, a decline of about 20 cents per ounce to settle above 17 at 1706, but still under pressure. When we look at a silver chart, this being a daily Japanese average chart, we can still see that at least on the surface, this bottom that was achieved at around 1650, is still intact, although we have upper wicks on the Japanese average candles. We still have no lower wicks, and as of today, that's still fairly bullish. And I do believe that we've got solid support at 1650 and resistance at about 1750. And that, of course, is based upon these bottoms right here. Also, in news that came out, and this is according to Bloomberg, as UBS and Deutsche Bank settled suits, they labeled themselves stop busters. We knew that there was something funny going on in the silver pits themselves, in the spot market of silver and the way that it traded. We certainly got an announcement confirming that today. And my question is whether or not that kind of activity to that extent still exists in silver. The key with silver is there is a vastly compressed or smaller amount of liquidity when you compare it to gold, so it is easier to really jerk or to move prices. Nonetheless, I do believe we have found support in silver at 1650. I do expect it to move higher from this price point. We really won't see any kind of real resistance till about 1750. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekend review. Bye-bye.